Okay, folks, welcome to Market Wrap. Let's begin with the positions that we took off the table today. Alliance Bernstein. We did manage to close up higher, which is definitely better than the overall market. But as you could see, once again today, we put in more topping tails. So, yet again, another day of sellers moving in and selling strength. This is probably just profit taking, but we knew going into the day that we were going to book some profits, at least on the TNA anyway, given that we had positive news out and that we would probably see some selling on the news, and that's exactly what happened. So Alliance Bernstein did manage to outperform the market, but given the chopping action and the fact that the market faded, we were out, closed out the position. The TNA, again, we went into the day with a profit. We made a new daily high. We sold strength this morning, and only minutes later, hammered, and we flashed a bearish engulfing of the prior day's move. So the probability of further downside is pretty good. Now, I'm not saying let's get short the market yet. But a warning flag is on the track, no doubt about it. Volume was light. Taking a look at the dollar did open up weak this morning, then rallied back, and then gave up those gains to close down on the day slightly. Volume dropped off versus yesterday's light volume. So I don't buy into the fact that the dollar rally is quite over yet. I simply don't believe, as I stated last night, I don't believe in stocks, currencies, commodities, just simply stopping and then breaking down. Normally, there's a process, much as what you had back here, a double top, some stalling action. Could this be a top? Sure. Now, taking a look at emerging markets, the EDC closed higher today. We have a position here, but we did close off the highs of the day. So it's kind of clear that we need a dollar break for emerging markets, for gold, for silver to rally. I mean, even today, I'll go to NUGT in a moment, but even today, with a weak dollar, NUGT sold off, as did gold. They opened up strong, and they faded rapidly. Now, the 10-year yield for the second consecutive day did not budge. We are flat on the week. So we have stalling action here on the 10-year yield. This is a weekly chart. Now, tomorrow is going to be the release of the Federal Reserve's April meeting minutes. Now, the dollar was able to rally on the announcement by the Federal Reserve, their statement last month, which was revised, and they implied that they would allow inflation to exceed the 2% threshold that they've been standing by for the past 9 years. So that should have been dollar bearish. It wasn't, due to the fact that we had the trade war tensions going on with the Chinese. Now, tomorrow, if we get that same message, I'll be curious to see how the dollar holds up. Does it hold up? Given the fact that the trade tensions have eased now, what will keep the dollar higher if, in fact, the Federal Reserve's meeting minutes are, in fact, implying that inflation may, in fact, move higher past their target? The tips, bearish key reversal day today, on volume no less. The volatility index, it rallied today. A nice W formation forming here. Rising ultimate oscillator, higher low on RSI, and it appears poised to hook up. So we're seeing a bullish setup here on the VIX. The Dow Transports, breakout point failure today. We broke out yesterday, failed to hold that support level today. Bad stuff. Volume, very light. The indicators are definitely weakening here with lower highs and lower lows. The Dow Jones Industrial Average, a bearish reversal day. We took out yesterday's lows, which implies to me that we're going to see lower lows tomorrow. So, unlike recent days where we've woken up and we've seen futures fairly strong, and I was confident going into the trading day that we would hold the gains, if not capitalize on them, I think that today's fade was indicator number one that confidence that we could have in the bright green futures is over for a while. Now, ideally, we just pull back tomorrow, fill this gap between where we gapped up yesterday, and then on the heels of the minutes, if it's market bullish, then we might get a key reversal day, a bullish key reversal day. So we'll see. The S&P 500, another index which had a breakout point failure. It broke out yesterday. It gave up those gains today and then some. Remember yesterday, I mentioned the topping action and volume. Volume has been very, very light on the large and small caps. Gold. Now, gold, I misspoke. Gold closed up today. NUGT closed down. We eked out a gain on gold by $1.10. And in fact, we broke out. Remember last night I talked about this flag formation, and we broke out of it today. Now, we did close well off the highs of the day, which is a concern. Volume was weak. Two positions, NUGT, weekly chart. Now, I was looking at the daily chart, and I noticed some odd price action on money flow. So I decided, you know what, the money flow anomaly went back to March, so I figured let's bring up a weekly chart and take a look at money flow, which is right here. Now, keep in mind, we've been putting in lower highs and lower lows for months. However, when you take a look at the low here, back in December, money flow has been putting in higher lows. We did break down here, but we popped back over the past 2 weeks, despite the fact that price action has been negative. Now, keep in mind, this measure of money flow is as of the 18th, last Friday. This does not account for this week's price action and money flow yet. We won't know what that looks like until next week. But this is interesting in that we are shrugging off, meaning money flow is moving into NUGT, yet we're still seeing price action, which is weak. So what I'm guessing here is that we're seeing stealth accumulation of NUGT. Now, this can go on for weeks, if not months. I don't know when this would end. It'll end when we finally break out on price. We're not there yet. I don't think there's anything to trade off of. Daily chart. Now, on a daily basis, here's what caught my eye, is that we've been basing, pulling back, yet money flow has been fairly firm. It's been pretty good. And this is real time, this money flow. On a daily basis. Weekly basis, you need to wait for either the weekend or Monday, one of the two, for a refresh. All right, so daily chart in UGT, bearish key reversal on the day. Let's go to the other chart that I have here. All right, so we did manage today to rally up and into the upper band of resistance. The prior upper band of this triangle formation was revisited today for the first time since May the 14th. USLV closed higher today, but well off the highs of the day, and we did break out. But given the hollow candlestick, I don't want to play games here. Had we closed at the highs of the day, I would have certainly added to our position. Do I think we could move higher? Yes. Do I see good things here? Yes. Let's talk about RSI for a moment. Let's update the chart first, and we'll talk about RSI and Stokes. Okay, RSI today broke out. And normally when you get a breakout on RSI, you get that pullback, retest of the breakout point, and then a hook up. So that's what I'm expecting here. Now, volume today was horrible. Yes, it was above yesterday's volume bar, but horrible, horrible volume. And Stokes are hooking up. They're moving in and putting in higher lows. And we have a double bottom setup forming on MACD. I like the price action on USLV less worse than what I do on gold right now. TCP Partners, I mentioned last night, we had a bit of an anomaly forming, second time I'm using that word today, on RSI. Actually, not on RSI. I didn't mention it on RSI. I said on Stokes and on Ultimate Oscillator. And we got to hook up today. We actually moved higher today. We closed with the highs of the day, but now we have a breakout on Stokes, and we have RSI now hooking up again. We have a little bit of a hockey stick formation forming here. So I think we're going to move higher on TCP Partners in the coming days. EYES, an outstanding day. A bullish key reversal. I think we move higher here. All right, let's take a look at our short ETFs that we may reopen in the coming days if the market sends us a signal. I don't think we have it yet. While we did see an update today, a bullish reversal bar on the SPXS, which puts you short of the S&P 500. I didn't see any panic. I didn't see any fear. I think what we have is concern about the minutes tomorrow and some selling on the news. Now, what looks interesting to me here are the Stokes. We may be getting a higher low put in here, but that's not enough to go shorting the market right now. Let's update the chart. All right, so I added this line here, and you can see that we did break out a couple of days ago on RSI as we consolidate within this triangle formation. But we don't have a breakout yet, and we certainly don't have volume. So it's best, given the fact that the path of least resistance remains to the upside for the markets, that we not try to outwit the market right now. I'd rather wait for a message by the market saying that, okay, we're seeing distribution, it's time to get short. The SOXS, we're watching. We're seeing some bottoming action here, but nothing sexy, nothing that makes me want to go jumping in and shorting the semis right now. In fact, Stokes are rolling over. We'll keep an eye on it. Cure, I skipped over this one. The healthcare bull ETF, of which we are long. Breakout point failure today. So we'll give it a little bit of room here, but if we close back down below $44 per share, we have to get out. So $44 per share is our stop on Cure. All right, to our watch stocks, let's go to a daily chart of America Mobile, our oversold stock. It was up on the day. It did not recapture support. Therefore, the path of least resistance still remains lower. However, Stokes are hooking up. We may get a rally here. RSI is back above 23. I'm no longer interested in this one. We will probably rally. I'll become interested in it when it comes down to our level down here at 1536. UGAZ, this was brought to our attention a few days ago by fellow member Anthony. It was a stock chart request, and what a rally it's had over the past several days since we discussed it. Now, let's go to a weekly chart, because I remember mentioning back then, this is a monthly chart, that, wow, pretty chart, that pretty chart here, not here. We were in a very long-term downtrend. Now, we are breaking out on a monthly basis. Now, were we to close out the month today, we would have a breakout above this upper band of resistance, bullish stuff. Now, on Thursdays, we get the Nat Gas inventory report. I don't think that any one report right now is going to doom the UGAZ. However, let's go to a daily chart. However, what it may do is, if it's a report that isn't as bullish as some would expect, or slightly bearish, that may give us a pullback that would act as a good entry point. So we'll use a pullback on UGAZ as an opportunity to open up a long position. Now, I wouldn't get aggressively long of the UGAZ until we close out the month, ideally above that resistance level. And keep in mind, folks, that this is a leveraged ETF. If you want to buy nat gas, buy the USO if you don't want the volatility. Now, taking a look at RSI, outstanding price action. Higher lows, higher highs. Same deal here on Stokes. So UGAZ looking really good. That's it for tonight, folks. I will talk to you in the morning. Have a great night.